Great guest in the studio with us, Julian Emanuel of Evercore. Julian, good to see you. Good morning, mate.
Good morning.
Let's start here. This week, NVIDIA. Then we've got Chairman Powell. Throw in China into the mix as well. If you're coming back from the beach, dazed and confused, and you had to pick one right now, what should you be focused on?
Sorry, there is no pick one here. All of them matter. And to us, that is a large part of why we've seen the market drift gently lower, people taking risk off. This is not an end of bull market run. This is just a correction, normal, seasonal. Again, I would say what's really important is less what we're going to hear from NVIDIA, less what we're going to hear from Chair Powell, less what we hear. And overnight, we obviously had some moves from China, and more the price action in response to all of these things. And frankly, it's an open question as to what we're going to see in terms of the price action.
What everybody wants to know is to dovetail Julian Emanuel's equity work in with Ed Hyman's economics. Ed has been out front believing in the disinflationary trend. Does he still have that in place, and how do you dovetail that into an equity call?
Absolutely. Absolutely. Ed, continues to think that inflation is going to come down much more rapidly than people believe. And, of course, part of that is we're likely to have a very mild downturn early next year. But when you pull back and you think about the implications for investing, there are actually 3 lessons from the 90s that we need to learn here. Number one, we understand the run-up into technology with AI, et cetera, et cetera. We think that's real. But the other thing there is that there is a time, such as we saw in the 90s, where markets do pull back. But the more important thing, because we've been talking about yields already this morning, is that you were able to make money in stocks in the 90s when yields were 5 and 6%. And the same thing is going to happen in the next 24 months.